Greatland was sitting there with Havieron. They were the obvious buyer of the rest of Havieron from Newmont. And if anyone bought that, why the hell wouldn't you want Telfer? You know, they haven't managed to push that decline in as fast as people thought. How many tonnes do you get out of an underground mine? It's not going to fill Telfer. So, you know, something extra is required in that region. You know, that's not just my view. There's obviously enough people in the market who keep buying Antipa.
Righto, Money Riders, we had a bloody impromptu surprise visit from a great friend of the show, Hedley Widdup, line selection crew. Good short notice recruit, and Travis.
What a lucky coincidence that he happened to be available and in town the exact same day I messaged him. We had such a wicked conversation about every single gold junior you can think of, Matty. We asked...
I was surprised how many gold juniors you peppered him about.
Mate,
have you got a newfound passion?
I cut my teeth in that sector, Matty. Once you're across it, once you do the gold comps in corporate finance, you never forget the companies.
They're all had repeat histories. But yeah, pretty much went through friggin' everything other than a mid-cap. In
if they
gold.
produced, we didn't talk about them.
Yeah, and if they're potentially producing or bloody, he's, it was a friggin' good yarn.
It's awesome.
So,
keen to hear it, guys. Maybe they'll sort of get their big day in the sun as we're starting to see.
JD, have you heard if Lassonde have thrown that offer to Jero James yet? WA Waterbores?
Cannot confirm or deny, Matty, but I've got a sort of price that I think gets the deal over the line in my mind. What are you thinking?
Mate, if you've got a contact there, mate, he reckons 30 mil would do it. But based on the fact that the best bloody mud rotary drillers in the world are at WA Waterballs, they'll probably make that in a year and a half. So that multiple doesn't even make sense for me. So Visan
checks the box for...
Open up the checkbook, I reckon. You might be... Mate, they find water with gold in it in this bloody environment. So we're talking bloody borefield installations. You want to find water, you want to fuck water off, you want to bloody do anything water related. Mate, you can even drill paste holes into your underground with the WA Waterbores team, and they're bloody vertical angle, anything. They are the absolute gurus.
And gold will come out of the...
Pretty much. You can flush it gold straight up the bloody paste hole into the back of your truck if you want. Go Jero James, go Visan buying Jero James.
Open your checkbook.
Let's
Go WA Waterballs, to be clear.
yeah, but no, well, bloody maybe two.
One and the same.
Yeah, two transactions. Righto, let's get into it with headers. Righto, buddy miners. Headley, make hay while the sun shines, mate. This is your time to do as many podcast interviews as you can. I tell you what, Hedley Widdup, Line Selection Group, how are you, mate?
I'm well, thanks, Matty. And I must say, it's a great privilege to be sitting at this round table, which has become quite famous. I've been blessed to be on your podcast before, but never in this office. So this feels like
table, mate. Yeah.
Feels like a first time for me.
It's pretty impromptu and serendipitous. I sent you a text message this morning, and I said, mate, when you're in Perth next, I was thinking, like, this is Gold Junior time, and you are Mr. Gold Junior. And you replied and said, I just landed. I'm here. Do you want to get a beer? And I said, well, why don't we have a beer mic'd up? And you've popped in.
Well, you said when you come into Perth, I thought, shit, sounds like an invitation. I'll book a flight.
No such thing as a free lunch, mate. You want to have a beer? We're getting an episode out.
I even managed to organise a site visit for tomorrow. So, awesome. Legitimise the whole thing.
Awesome. I hear you're visiting a deposit with my name.
That's right. The mighty Ricciardo in the Murchison region.
Yeah.
Yep. I don't want to. Well, it sounds like, they say don't kiss and tell. I haven't even kissed this one yet. So what's it like?
So what's it like, mate? You've since we first interviewed you last year, you're one of the, I guess, more publicised early movers seeing the value in junior gold stocks, and they've all had a bit of a run, and a lot of yours, most of yours, have had a pretty good run. Some yet to probably run as much as you like. What's the vibe like? How do you feel about picking it and it's finally sort of happening?
I think I've been working in mining finance now for 18 years, and then there was 10 years of mining before that. And I think one of the things which you recognise after that long in the industry is how cyclical it is, and that, there's good times, but you've got to recognise when there is a good time, because you need to, like you said, make hay when the sun shines. They don't last forever. At the moment, we've seen the gold price rocket away, and we started buying into the junior golds just thinking that they were the most depressed, as in they'd been sold off the hardest, particularly when critical minerals were all the rage. It was like, who gives a stuff about gold? So we were investing in it at that time feeling contrarian, but also feeling that the risk profile across the entire junior space was very much skewed. And if you were paying a lot for critical minerals at that time, you're also taking marketing, metallurgical, etc. risk. And in gold, that is a risk which is generally much, much lower, if at all. You can dig gold up, separate it, and sell it a lot easier than anything else. So if you're getting it cheap, it's a great time to be in it, and then you wait and hopefully it goes up. So that thesis played out, and it feels great. But, now we start to think, where does this lead? And I guess nobody knows the answer to that, but I do feel like we're quite early.
Well, and it seems like a very basic overview of it. It feels like so many companies were stuck in the hole of very small market caps, beaten up like anything, inability to raise that much capital that can actually get them much. Now there's actually a bit of equity and momentum in them all. They're like just the tailwinds you get from being able to raise, 2-figure amounts of money and now just set up. It just seems it's either one end or the other.
Yep.
And it just really feels like that's pushing them all at the moment.
Yeah, well, I mean, last year, if you took the first half of last year and then even trickling through into September, October, a big raise was $10 million if you were a gold company, and even if you were reasonably
outside
advanced.
the placement capacity.
yeah. Well, now, you've got companies raising $30 million every second day, and not much has changed other than the gold price. But yet, I think if you look at it from a value perspective, you're still a long, long way behind what you would be buying in terms of dollars per ounce or whatever metric you want to use that kind of values what a company might be able to produce versus the producers. The producers have benefited from the gold price, maybe not as much as you would have expected in a 1980s style cycle or a 90s or even noughties style cycle where gold starts going quite hard and a lot of speculation starts to get built into the equities. I think we live in a world now where gold is being bought by such a large market which doesn't necessarily include a lot of Western speculators, whereas it's the Western speculators and the Western markets which need to purchase the equities. So whatever is driving the gold price isn't also applied to the equity price. And in the past, that leverage would have been much more significant than what we see now. And I think that has probably had something to do with the lack of feed through into the development space and the junior space, although there's a lot of relevant recent history which probably has put people off of taking those risks as well.
Are you still seeing a pretty substantial disconnect between the equity valuations of the undeveloped juniors versus the producers, and kind of how are you quantifying that?
Yeah, how do you measure a whole sector? Not so much in valuation. That's a harder piece. Although I would say subjectively, non-empirically, yes, I see that as a big difference. If I just took aggregate prices and the way that they trade, and you say, well, if someone's got some good ounces to come out of the ground, then that group of companies with good ounces should be trading in a similar pattern to the people who are producing good ounces. And they must be good ounces because you're producing them and you're making money. So some are better than others, but there's good that make money and there's bad that don't, I suppose, if you just draw that very black and white distinction. For the last 3 years, the gold producers have taken advantage of a robust, semi-solid, now almost vertical gold price. And they've been able to expand their revenues. They've been very fortunate to be doing that against a backdrop of prices not inflating all that heavily. Price inflation in the mining market has been driven by iron ore in the noughties and coal at the same time. We've had the critical minerals boom and all these new lithium mines that had to compete with a labour pool that wasn't expanding, but the amount of mines wasn't contracting. So that pushed costs amazingly, and that's not a factor at the moment. A lot of those jobs have fallen away. So the gold industry, I think, is able to make more money at the same time as costs not chasing it up. And we haven't seen the kind of, let's all push our pit optimizations out and start mining marginal material to make more ounces that make less money. I'm sure that'll come, but we haven't seen it yet. So the producers have run away. They've had that price trend for 3 years. In that same 3 years, the developers have been on a downward trajectory, I would say until very early this year or late last year, when the junior/explorer class, if you just take it as a whole, and I'm sure you could pick out the ones which are the better performers versus the worst performers. But if you just take a median across a very large group of maybe 100, 120 of them that sit below a 200, 250 mil market cap, that ticked up as of last year, and that broke a very significant 3-year trend. So it wasn't the gold price which pulled it out of that. I think it was money coming down from the producers and saying, where can we take a bit more risk to expose ourselves to a bit more performance? So I feel like that corresponds with the raisings that got bigger. The two seem to go hand in hand. So if I had to say, is now the time for gold juniors? Yeah, I think we're into that era now.
I think kind of bit devil's advocate against what you said about the labour pool and everything dropping off. Like you agree with the lithium and the nickel putting a lot more people into the market. But I guess what's happened in parallel with, with gold, like you got obviously a lot more of a underground mining pool that you have to pick from.
Mm-hmm.
And, word on the street, the amount of people that Northern Star are consuming for this Kalgoorlie expansion is really chucking a lot of pressure on the employment pool at the moment.
Yep.
There was a lot available, but it's like that expansion is really taking a lot of people out of the market. So, and when we get to the point of, we're like, these prices are up, how are they not? And lithium's dead. Like, how are we not producing as cheap?
Yeah.
Like, those big operations are actually sucking a lot of people.
Well, that's true. And I suppose that there will be other gold projects which are also expanding or, bringing more people on. I'd just contrast that if you were to take now and the expansion of the super pit, and perhaps that's another 100, 150 people. I don't know, rough numbers, you might know better than me, but I can think back to when I was finishing up being a geologist and moving into mining investment. That was when iron ore was going from $40 to $100. And that was a case of, you used to get paid 60 grand a year as a truck driver, and suddenly it was 120, and then it was 150. And it was just, they needed bums on seats, and it was expansions that were bringing in thousands of people, not hundreds. So I think that, that was in a market which needed to expand in order to do that. My sense would be that if Northern Star or anyone else in the gold space says we need a couple of underground operators or we need 100 of them, you put an ad in the paper, and you're more than likely to have, a large proportion of that pool that apply have some experience that they can bring to it, in which case they can be picky. So it's probably not having to expand the labour pool too much. Whereas, the case of the truck drivers in the Pilbara and the noughties to the late noughties, I would say there was very few of them went with any experience.
I've got to ask, Hedley, if the gold juniors have kind of picked up already, and some of them are fair way off their lows, some of them are yet to really tick up yet, but certainly it feels like that tide's turned. Why are you not fully deployed? I mean, at 31 Jan, you had, what was it, $61.3 million in investments, but cash and term deposits of $47 million. Don't you wish you had that deployed before, or there just weren't like ways to actually deploy in that size in the junior market?
Part of me does, but we're not traders. So the part of me that wishes we were deployed would also be the part of me that was now sitting there going, well, if I want to top up in anything, like a Saturn Minerals, which we did yesterday. Sorry, yesterday was Sunday, so we announced that today. If we wanted to top up in anything, we'd be needing to sell something, and you'd be crystallising a return. But when you've got to sell anything to follow your money, you're stressed and you might not be making the best decisions. So I know that's probably a weak defence for not being fully deployed. I must say it's difficult to time when you think a market is really going to run. But what we've been focused on, we exited the market to a large extent in 2021, 22. We went to 90% cash. We felt like we were at the top of the market. There was opportunities to sell some big investments, and I don't know, opportunity meets preparation, I guess, but at the same time, you're probably only half clever. You're also very lucky. And but found ourselves in a situation which I don't think too many other asset managers were, to be fully cashed at the top of the market. And then as that market, and our market is the juniors, fell away, the purchasing power of that increases. So the temptation to be coming into the market was always there, but it was also met by, are you going to be investing too far before that market turns around? And because we feel that the investment return which we're hoping to get off of this pool of assets is going to be over, let's say, 3 to 5 years. In practice, it could be longer. It could be a bit shorter, but I suspect 3 to 5 is probably fairly near to what the ultimate boom phase might be. And to crystallise value, some of them are going to have to make discoveries, extend their deposits, develop mines. We can't be looking to sell once we've had the return that we have. So I think in that same quarterly, it would have said we'd invested about $31 million, and that pool of money which has been invested just in Australia was up about 52% at that marker. It's up by more now, but the market is fortunately moving. We can follow that money, and every single one of those companies,
they're going to need more capital.
Is at risk of needing more capital. There's one I don't think they will, but the rest of them do. So let's say across the portfolio, we need to be prepared to follow our money. And when you're following your money, you're probably waiting for another low price move marker, because no one, very few companies in that space get it right where they go, right, we've gone from 10 to 50. Let's raise all the money we need now. They kind of get to a point where they come issue, and if they'd hit 50, they come right back to 35 before they raise money again. So you're probably always getting a bargain when you're putting fresh money in. So we're very conscious of following our money to that extent, because our position as a visible shareholder is sometimes something which can influence the success of a raising as well, particularly in a market which is not yet roaring. I think it's going well, but we're also cognizant that if we're, a 10% shareholder in something, someone's raising money and we go, we're not interested, that book might not be as full. It might put pressure on the price, and it's often something that we're either there and we're investing, or we're finding a way not to be there, and there's not too much in between that the market will be happy with if there's a raising on.
This might be a weird question, but with the market, I guess, re-rating to some extent, is your investable opportunity set bigger or smaller than it was 12 months ago?
Well, the investable opportunity set has probably got most of the critical minerals in it now, whereas 2 years ago, I would argue they weren't. And it's, there's no objective marker. It's what I think. Because if I decide I'm not interested, then I won't do the work, right? So, so I think, there's some of those which I could be quite skeptical about. But if someone came in with what is obviously a large and attractive, sector-leading lithium deposit or rare earths, I'm happy to have a look at that. I'm happy to think contrarian. It might not be something that we put a large amount of our money into, but it's something that we're very happy to think about and see how that's going to play. Because if the lithium price starts to move, the most leveraged thing that you can be in is the biggest, best grade, undeveloped deposit that's in that space. And that's where we often try to put our money. We'd put money into rare earths, and that was the mentality we had. Look for that. If it doesn't exist, don't do it. But I would say that opportunity set has broadened. Now, it's easy to say when the gold price has almost doubled in that period of time that the critical minerals couldn't possibly do that. We've seen them all come off quite horrendously in many cases, and probably been the worst performers across much of the commodity market. So how can you be so contrarian about that when, gold was maybe a bit obvious? We're biased by the performance that we've seen. It's difficult to make that comparison. So I'm open-minded to looking at them. But the other thing to think about with gold is that, like I said before, they tend to be lower risk. So if you've got $10 to spend in the mining market and you want to do 10 stories, there's a pretty good chance that out of all the things you assess, 4 or 5 of them are going to be gold that raise to the top just because of pure weight of numbers. And if you're risk influenced, if you want to hold something to 3 to 5 years and see it grow, see the project be successful, and the value which you've come up with in an empirical way is realised by the market because it's time, you need to have that time for that to play out, which means you can't take an institutional approach to something that starts off being capitalised at 10 or 15. Because you might be right, but then you're trapped in a lobster trap, and if it's just an illiquid stock, you might never get price discovery. So there's a lot we've got to manage in that sense. And we often get shareholders will often come in and say, "Oh, did you see this trade? I made a lot of money off of it." And it's buying an esoteric option in a company which was on death's door, and something happened and squeezed it, and the options went great. It's like, well, there's about 50 or 60 cents of liquidity in that. I wanted to put $500,000 in, would have swamped it. It's impossible. Couldn't get in, couldn't get out. So there's a lot that happens in the junior space where, for an institution to invest, you have to be very careful about what you pick, just because that money can influence prices in the wrong way as well.
Right, you want to extract 100% of these bloody resources that Hedders is talking about, you need a paste plant.
You need an EPC contractor to design your paste plant. Build your bloody paste plant,
Oh, mate, Quattro, they, as you said, design, engineer, construct, and that paste has to go somewhere. Goes into the paste fill retic pipes underground. They put those in. It goes through a Quattro paste diverter valve to optimise the flow of this paste so you don't have to bloody turn the plant off. I think in the future that the generic word paste fill will be termed Quattro fill, because they have just frickin' taken over the world of paste fill, and it's going to be like Band-Aid or Red Bull.
There is no underground engineering that these guys have not, wrapped their fingers and hands around. This is their bread and butter. They are, just Jeremy. What an entrepreneur, starting a company, having a crack, building something special with Quattro. Get around them.
Mate, it's decades long now, so absolute EPC gurus. Keep an eye on them at Underground Operators Conference and get them to tell you how good they are instead of me.
Go Quattro
as well. Let's get back into it. What do you think about, if you're going to split up the gold juniors at the moment, the ones that have performed well, performed not as well as those who are well in terms of the information they have out? I'll pluck a few names. Ones that have really outperformed of late, like Medallion, like Astral, Mika, they all have there's a study, there's some numbers that you can wrap your head around of hopefully what will happen. One that probably hasn't performed as well and starting to go is probably Great Boulder. Doesn't have a study yet. It looks like they're trying to get to 1 million ounces before they actually wrap a plan out. I know they announced the other week that bring on some people to progress studies and everything.
Mm-hmm.
Is that influencing the performance of these juniors? If they've got some numbers for the investors to say, no, that makes sense, or don't want a bar of it?
Well, the short answer is yes. I think that's very important. But I think you've also got to take a step back. And I've seen some very clever people in the mining space. I'm not going to give you their names, but you'd probably guess it pretty quickly. They know their story back to front. If you put them in front of a purely retail audience and you say, you've got 15 minutes, spew it out, they'll hit you with grades, they'll hit you with tons, they'll hit you with timeframes and costs and all this other stuff. And the retail people just go, what the hell are you talking about? I don't understand. There's no relativity around a parcel of 10,000 ounces. There's no relativity around how many millions of dollars it costs you to produce that. So studies are useful because it gives you the basis to announce something and then to put that into a layperson's terms. And I think that's probably where the magic is having a story where you can genuinely say, we have done the study. So if you've got the time and the intelligence, go and read it and digest it, come back with questions if you like. But I can say with confidence that this is what we're going to do. And I think those companies which have have really flourished in this market have been ones who can say things like, we have a plan, a la a study. We are advancing and they've made tangible progress towards being in cash flow. And in many cases, they've been able to procure some kind of a surprise or at least a step down in terms of how much it was going to cost. So they're not standing before the market and saying it's going to cost us $500 million to build a project and that is all we can do. We're a small company and one day we're going to need that capital. In the case of Medallion, which is, I like talking about that because we put $1 million in at 10 cents and last I looked it was 20 something.
25 and a half today.
25, there you go.
They IPO'd at 25.
Yeah.
Come back. I think they went down as low as 3.
Yeah.
3.5.
Well, we didn't get any in the IPO and we didn't get any at 3, but we did get some at 10 cents not long ago. So what they did was, they had a study and it showed we're going to go into production. We've got a great inventory and I think it's a very well-drilled deposit. It's well understood from a geological perspective. It's not a new resource, and that there's an advantage in that. But one of the disadvantages is it's been sitting in the ground for a long time, and people say, well, what straw needs to break this camel's back to pull it out of the ground? And I think in this case, the straw that broke the camel's back was stepping away from we have to spend, I can't remember what the CapEx was going to be, was it over 150 to build a brand new plant? And by the time you're doing that for one deposit, which has copper, with gold, oxide, transitional and fresh, you need to be able to try to come up with a CapEx solution which meets as many of those requirements. And as you know, if it's plain gold, you can use one plant, reasonably simple. By the time it's copper, you need to think flotation. And by the time you add weathering into that, it can be a nightmare. The nickel collapse happened. IGO found many of its operations unsustainable, so they've been able to get access. Well, they've got an option. On the Cosmic Boy plant, which is 150 odd Ks by road, which is, it's not next door, but it still makes sense when you're taking
2 grams.
I think it's a bit more than that comes out of the ground, but it enables them to go in with a smaller development footprint, smaller CapEx and get into business. And I think there is an element of the market which in the last, I would say, call it 2 to 4 years, has been much more open to you don't have to develop something which is going to be 100,000 ounces per annum because there were so many deposits which were shoehorned into that and they should have been longer life, smaller capacity or whatever. But, some of the mistakes I've seen in the market, that's probably part of the reasoning. In the Medallion case, they've found a way, it looks as if they've found a way into production, which cuts the CapEx back that they need to raise. And, by the time they get to it, well, how much do they need to raise? They need to exercise an option. There's a net off for the environmental rehabilitation cost. And what they've told the market is that, I think it's a $50 million option. So they're not going to have to pay 50. It'll be reduced by a liability amount. And then they need to pay the CapEx to do the bits and pieces to make that plant work for gold. So, instead of the original, and I can't remember what it was, but maybe it was $150 million. It's now, sub 100. So it's a big reduction. But the other advantage of doing it that way, and not everybody can, is instead of saying we need to build all of this from scratch, which means you've got to raise all that money in one go, It's not like you can do a raising one year and buy your crusher and your camp and then come back the next year. You know, once you're committed, you've got to do it all. In this case, it's like they raise the money to pay for the option, raise the money to do a bit of the capex, raise the money to put yourself into production. And there's a couple of bite-sized chunks there, which make it eminently more manageable. And because you're scaling up your market cap each time, you know, you've got a much bigger rump to raise money off of. So I think that's probably part of the success, and that applies to some extent to some of the others. Astral is probably the odd one out there in that they don't seem to have an easier way into production other than building their project. But they've very successfully demonstrated to the market, and, you know, it's up to Mark Duclair. Some call him Chocolates Duclair. I quite enjoy him introducing Mark to conferences. He's not here to stare at me or send me rude text messages now, but I'm sure I'll hear about this when it goes to it. Have you ever get a picture of, if you Google Alex Perry, the fashion icon, with sunglasses, you got to stipulate sunglasses. Just tell me what it looks like, because when Mark Duclair calls my phone, that's the picture that comes up. So Mark has very successfully compared their project to something like like what Capricorn did with Karlawinda, and basically it's not high grade, but it's large tons, it's stable costs, it's stable throughput, it's a very bite-sized mill. You know, you're buying, everything is vanilla in terms of putting it on the ground with capex. You're not taking too many technology risks or anything like that. And I think that story has been well told and persevered with. And, you know, as one institution comes, bit of success, another institution comes, you know, so that one's been built up a bit more piece at a time there. And I wouldn't say that there's been a breakthrough other than Mark convincingly telling that story. Not everybody can do that because, you know, there's a circumstance, audience, timing, all the rest of it that comes into that.
And like, well, those two companies specifically and everyone else, they all grinded it out in the absolute dog shit time of exploration being hated.
Yep.
It'd just make more sense if that went to an expanded Higginsville mill, that project.
They've just ramped up Maximus. Well, I think went
that went. Yep.
Well,
So
there's been
compulsory acquisition.
I mean, there's been trucks go further than that.
It's not even that far
to take material to the St Ives mill, which
that's a logical one for them. But
if you ever flew over St Ives in a helicopter, I'm not saying I do that very often, but I did it once, and there was nothing on the ROM pad. I used to work there, so I know what the ROM pad should look like. So
they've been putting crushed heap leach through that mill semi-recently, I believe.
I believe so too.
I think the thing on Medallion, the one thing you didn't mention is the fact that they can market the copper now.
Yep.
Because copper was the taboo for that stock. They're like, how are you going to deal with the copper? And that was the whole thing. And now they can put drill results out that say 5% copper because they've got the processing solution. So they've got extra, you know, firepower in the perception of that stock.
Well, and
now.
10 years, or maybe not 10 years ago, but in the last market where copper was, you know, hitting choppy levels, TCRCs and what you would have to pay away in a copper concentrate was a much, much higher value in proportion of the value of the ore. So, you know, if you were selling 5% copper or 5% ore going into a concentrate and going off-site, you know, you would still see a material cost that you pay in that. There's been so many smelters built. You know, Glencore is trucking some of the shittest concentrates in the world up the train line to Mount Isa to keep that smelter full. So there's arsenic going to places where arsenic probably need not go. I'm not saying it goes up that train line. You know, couldn't substantiate that, but there is a demand for copper concentrates now, and if they are good quality, they are in high demand for blending. So I would say that that's something which has also inflated that copper story for them, in that can enable finance. So what they said the other day was they'd have a number of offtake interests, and some of them are offering debt terms alongside the offtake contracts. And if you can do that, then it means you don't need to deal with the bank.
And the more gold in it, the more they'll take.
That's right. Yeah.
Another portfolio company that has really bounced, and there was a catalyst, Antipa. It's up like 300-ish% since Greatland acquired the rest of Havieron and Telfer. Talk us through you know, how you see Antipa and their recent performance.
Well, we invested in Antipa. I can't remember the exact date. I'd say it was definitely before a Diggers and Dealers, because I remember talking to them about it afterwards. So let's say that was mid-2024. And at that time, we were looking at something where I think they were raising about $6 million. They already had a reasonable size inventory. And where they were was in the Patterson. And, you know, I cast my eye across Western Australia, rest of Australia. The most heavily developed part of Australia for common infrastructure, which would be useful to so many people, irrespective of where their tenement boundaries are, is probably the Yilgarn and, the central area of the goldfields, around Kalgoorlie, the Murchison, etc. The Patterson is not heavily developed. In fact, it's quite remote, but it's very close. Well, Telfer is in the heart of it, and Telfer is a pin-up operation. It's very large, has been a very large gold project. So we were looking at Antipa thinking, these guys have a big inventory, and if you take a 5-year view, particularly if the market turns around and turns into a boom, this is something which should become interesting, either to people that want to build projects or for these guys to be able to fund it. And at the time we were looking at it thinking, it could be a stressful financing, as their market cap at the time we entered was about 60. But, given the passage of time and add a boom to it, market caps can increase. So we sort of took that risk on. Our thesis was definitely a twofold one, though. And one thing that we've tried to be a lot more cognizant of in this generation of investing in the last, let's say, 5 years is you're not just investing in the project and that has to be successful, because that's always something you look for. But if you can have a second exit point, which is just, is there a factor which is close to that could procure a development pathway or an exit for you from the stock even, that takes all the project risk, development risk off the table, and M&A is one of those. So we weren't buying Antipa because we thought there's M&A in this. It was more, there's a very obvious process facility there. It's 22 million tonnes per annum.
It's like 12 mils.
Yeah, well, it's
in one.
I mean, you think of a big mill in the Yilgarn is 3 to 5 million tonnes, right? And so here's one which is 4 to 5 times larger than that. Which great efficiencies in that, all the rest. But Telfer has had a very long life and found itself with very little actual ore. In fact, when Newmont sold it, it had 0 reserves. So that picture is changing now with Greatland having got hold of it and investing and all the rest of it. But we took the view that whatever happens with Telfer, there's a good chance that the Antipa ore there is of great use. And we clearly, it's hard to escape the obvious story. We didn't know it at the time, but Greatland was sitting there with Havieron. They were the obvious buyer of the rest of Havieron from Newmont. And if anyone bought that, why the hell wouldn't you want Telfer? So we thought, well, if you do that, how hard is Havieron? We were speculating a bit, but it looked like something which the development maybe hadn't stalled, but had come to the most challenging part of the development of it. They haven't managed to push that decline in as fast as people thought. How many tonnes do you get out of an underground mine? It's not going to fill Telfer. So, something extra is required in that region other than Havieron. They've done a great job of expanding the resources at Telfer since they've owned it. And I think the thesis still fits. But, that's not just my view. There's obviously enough people in the market who keep buying Antipa who either they share the thesis that it's a developable project, or I would say, given, the apparent ferociousness of buying in the stock, it's probably more like they also share the M&A view. So, I think that's something which a lot of people are talking about. But the thing with M&A is it's so difficult to deliver into because it's all speculation until it happened. And, I know you guys talk about M&A a lot. The thing I often smile about is that we all sit outside of an M&A deal and talk about what the obvious factors must be. When you're on the inside of it, those obvious factors are sometimes really difficult or, just nigh on impossible, and you try to deal with them. But, I think so in something like this, you look at it and go, well, there's a mill there, there's a deposit there.
There's a gap in the mine plan. Go there.
Go and do it. Yeah, but I mean, Greatland needs to list in Australia first.
Yes.
I think that's something which they need to do. And
Antipa needs approvals to fill that gap in the mine plan too, right?
That's right. Yeah.
Yeah.
But meanwhile, Antipa got one of the exploration JVs back from Newmont. That already had a ripping target on it, and off they go. They're going to be trying to drill that fairly shortly.
So they raised money, and it was confusing to me because they were pretty cashed up because they'd sold the remainder of their JV with Rio back to Rio, and they had heaps of cash, and then they raised money. And I was like, well, didn't see that coming. Are you, as a shareholder, comfortable with that raise because it just gives them a bit more?
Yeah, we
beef in the tank
participated in that raise, and it was priced at. Well, they've reconstructed the price, but that was priced at 20 cents, which seems a long way in the rearview mirror from 40 odd or the mid 40s where we are at the moment. The thesis at the time was they'd been doing roadshows. They're always doing roadshows. And one of them, I think, was the first foray overseas. It might not have been the first foray overseas, but they'd presented to a lot of North American institutions. And this was in the lead up to Christmas. So there was this question around where's gold going. It was starting to feel quite pleasant, like a lukewarm bath. But, we all knew we were going to the hiatus of Christmas and anything can happen over that period of time. So they'd had this interest, and I think what they felt was that in the book they were going to get some interest from North American institutions which were ready to go ready to pay a good price, and they would be able to come out to the market and say, look, we're funded right through. We can actually do everything we want to do. And if you think about that in the context of developing a project, it's very defensible to raise the money to say, we don't need to raise any. That's the second most powerful thing you can say, other than we've just dropped the capex, is we don't need to raise any more money for a long time. The only way to get these shares is to go on market and buy it. So I think it was a good thing for them to do in that case, that regard. If you think that there is any M&A coming, and I know no better than anybody else does here, but if that was to occur, you want to give yourself the longest possible time to be able to work through that. And so having an expanded kitty there also puts them in a very strong position to be able to say, look, we're drilling, we're doing our PFS. If someone's interested here, then let's talk. But the worst time to enter into an M&A discussion, and I've been a part of this, is when you know you need to raise money in the next 6 months. Because once that M&A discussion starts, it's incredibly difficult to raise money. And once that avenue is taken away, it takes away a real platform of strength. You can be starved very rapidly.
While we're talking about M&A, two of your portfolio companies merged very recently in Brightstar and Alto. Was this a deal you were pretty keen to see happen as a shareholder of both, and kind of encouraged?
Definitely blessed it. Yeah, we were very happy to see that as an outcome. And the biggest reason for that is that the operating assets which Brightstar have. Brightstar had nothing in it at that point, which was extremely large, high grade, or anything like that. It was a scatter of smallish things, and by smallish I mean up to a few 100,000 ounces. But quite
it's a
close.
Story of M&A that company.
Yeah, well, one thing which I would say Alex recognised very, very well a couple of years ago when he stepped in to be the MD was, he said, these might not be glamorous gold deposits, but they are so close to other people's process facilities, I don't need to build one. So to get into business, we need only a small level of capex, and I think that's been a very good thing for him. Because he's gone through a few transactions, I would say that the market is saying, well, you show me that you can make money now. But he's making money, poured gold the other day. So I suspect that you give it a couple of quarters of delivery there, and the market will start to listen, and we'll start to say, well, let's talk about growth all of a sudden. The growth story which they now have is that the cash flow they make from those small assets, and there's this trend of commercialising small assets has become possible in the gold market because there are so many big mills around. There's a lot of capacity to be processing parcels of ore. I know that's a glib remark. Not every single one has capacity, and it can vary in time. But it wasn't possible 10 years ago. 10 years ago, if you had a gold deposit, you had to build your own mill. That was just the way it worked. And it was almost a disgrace to go to the market and say, no, we're just going to dig it up and sell it to make a little bit of money. Now, if you do it, you can achieve a pretty reasonable valuation off of the back of doing that, and you can make good cash, particularly if you're doing it today.
Yeah. And you can risk share. Like, you don't even have to stump up the capex to do it. Like we're drinking stubbies of MMS, right? Like, yeah. And they're one of the pioneers of that model.
Funny you should mention it. You guys are usually pretty quiet about your sponsors, aren't you? So should I hold it up like that?
He's giving you the layup, mate. Have we done them this week?
But it is interesting, right? Like, I mean, they're one of several who've been willing to come on the scene and really provide an avenue for cash flow for these gold juniors by taking on, like, wearing a fair bit of risk in the process, but sharing the upside, the equity upside, and in a rising gold market, everyone's very happy with that situation, including shareholders.
And therein is the point as well. So all of a sudden you can do these small gold deposits. The thing is that for anyone who owns a small gold deposit, if they go to institutional investors and say, well, we're a $15 million company, we've made $8 million of cash in the last 12 months, aren't we wonderful, you should buy us. The institution goes, well, that's great, but what next? I mean, you've made that money, you've got nothing left. What are you going to apply it to? So that's the question with a lot of these companies. And for us, Brightstar was something we wanted to get involved with because we saw this commercialisation over it was a good 1 million ounces that we could see were possible between the Leeuwin area and the Menzies area. And that's over a period of time, that would generate a reasonable amount of cash. But at the start, and that was a smaller investment for us to start with, there wasn't the big growth asset. So when Alex's approach to us was to say, we'd like to do something with Alto, that's where the growth project came in. So, to fund Alto all on its own, there's dilution to shareholders. You've got to take that into account with whatever return profile you think you're expecting from the asset. And if you put that into a company which has the ability to fund it without having to raise money, then all of a sudden that just gets squeezed into the amount of shares which are on issue. So that was the investment thesis that saw us build our position when that deal took place. And I still think it was a fantastic deal. So interestingly, Brightstar has traded fairly flat since that deal took place. And I think when you buy something and you issue a lot of shares, there's indigestion. So a lot of those get turned over, stale shareholders, whatever.
They need to do a consolidation of shares too. It's like,
I think so too. Yeah. But they've done that. I think they've got a lot of that hard work in the market behind them. They're now concentrating, as far as I can see, on delivering that first part of the story. And for them to be able to work aggressively on a project like that Sandstone project, which Alto had, that was living on $2 to $3 million a year of exploration and spend, which is not enough to be doing it justice. I think the market won't sit there and be patient and say, we'll reward you for that. If you're spending between 5 and 10, that's where you can start to meaningfully grow resources and do it in a period of time where the market can see that and go, well, this is getting a lot bigger. And I mean, that's, I think there's been about 4 to 5 million ounces produced over that Sandstone Greenstone belt, which Brightstar don't own the whole lot of, but between them and their neighbour, they have most of it. That's a hell of a lot of gold for one greenstone belt. And I mean, the average depth of drilling is like 70 or 80 metres. So, you extrapolate that to 200, and what's the inventory going to look like? You're still well within open pittable depth, and there's some pretty big footprints in there. So that as an exploration and growth story is amazing. So, I mean, if you're asking me, and this is not informed by what they've told me, I cast my eye over the maps and use my own imagination. They bought something at Sandstone between that and the Gateway gold tenure, which was dealt in, which is about 1.5 million ounces. So for that to turn into a 2 and a 3, I think can happen reasonably rapidly in the sense of, 1, 2 or 3 years. And by the time you've got 3 million ounces sitting in that part of the world, which is ringed by mills, but no one in the middle, it's like, well, that's a 3 million ounce asset, which would be very attractive.
It's in the middle, but it's not very very good nick.
It's pretty much dead.
Yeah. By process facility, I mean something that you can put ore into and then gold comes out the other end.
Well, do you think they're probably getting penalised because they essentially have to build a mill there? Like what the only two options I can think of that have enough potential scale close enough by would be Kirkalocka and Walloona, and they're both pretty truckable. It's truckable, but it's still a good chunk. So do you think they know that it is a growth story, yes, but they're going to have to build it?
Well, I think that they're in business elsewhere and their intention is to apply the cash flow they're getting to re-establishing cash flow out of their own process facility at Leeuwin, which would mean they're an owner-operator and, they would have a lot more control over their own destiny than from the Leeuwin perspective.
Why don't they just keep giving it to RAL?
Well, they could.
Wouldn't it be a lot of, because that's until Genesis get their own operations up and going to feed, potentially 4 million tonne through that Mount Morgan's mill, like they'll be crying for dirt.
Well, I would have thought so too, but I don't know how Ral would feel about me saying that he's desperate for that dirt. I don't know if it's quite so simple, but there's bound to be a playoff between how much it costs to, have the dirt process there, anywhere else, or to bring your own facility along. Now, if there wasn't an existing facility at Leeuwin that Brightstar could rejuvenate, different decision. So clearly it gives them that optionality, which can be very, very helpful in discussions. But I suppose if in, let's say it's 3 years from now, they start saying, what should we do at Sandstone? If you've been operating for that long, you've built your capex, your market capitalisation to a certain level, you'll have to build a new milling facility. But how will you do that? Well, I would expect you to have a much bigger market cap to be able to raise money off. So it might not be as dilutionary. You may have the cash flow to fund your equity, and your ability to raise debt is going to be, you'll have far more flexibility. So I don't know if that penalisation would be occurring now. If I had to say what's holding Brightstar back, it would be there's been selling of former Alto shareholders, and there's probably been a perception that there's been a couple of deals to pull things together. Is there any more of that? And they just need to settle into a rhythm of delivery. And it looks to me like that's what they're doing.
What about the Menzies stuff? Like, do you think they need to probably simplify the business a bit and divest? Because there's a lot going on, and it's a bit hard to actually wrap your head around of, where's all this shit coming from?
I've introduced Alex at a couple of situations recently where I think he had 15 minutes, and in both situations I was standing next to him at about the 17-minute mark going, mate, are you finished? So he has a big story to tell. So, I mean, your point around simplification, if someone offered to take it off your hands, would you do it? I don't know. As a shareholder, I'd say, well, if there was value coming in, you'd be foolish not to think about it. But they had produced from Menzies in the last 12 months, which I think that probably shows you that but for getting the resources set up and a milling arrangement, they could do that again. In which case, if you think you can make money from it, then the impetus to be trying to do something with it might diminish pretty quickly. So I guess, if people are talking about it, then they'd be weighing up one alternative against the other. But I think, from chatting to those guys and keeping in touch with them, they seem pretty focused on delivering gold. And there's probably far more kudos in doing that than there would be on executing more deals, unless they were, ridiculously priced. So
then you've got another gold junior, which has probably not had a real run like some of the other portfolio ones. Saturn, who announced today raised $23 million. You guys tipped in another 4, and you kind of maintain that 17.5% shareholding of the company. You speak to people, and historically there's been a knock on Saturn that it's 10 million tonne per annum heap leach. Everyone's scared of it because it's massive size, and also like how many 10 million tonne per annum heap leaches are going around. There's a lot of dirt to move, yada yada. But at these gold prices, it probably makes a fair bit of money. Are you not worried about any of the logistical kind of nerves that a lot of the WA market has here?
No, not so much. I mean, I think the Western Australian mining industry is very familiar with bulk operations. What they're not familiar with is bulk operations in a gold mine, and that's because in most gold mines you need to be extremely selective, because your gold zone, could be somewhere between 0.5 metre wide and 10 metres wide. 10 metres in a great case, and if you leave 0.5 metre of that behind, or put it in with a waste, or take too much waste, it can be a real problem for you. In the Saturn case, I mean, one of the reasons which we really like Saturn, and this is our biggest investment by funds deployed, so it's something that we've demonstrated a fair bit of commitment to, and I think by the time you've invested that much money in it, your futures are somewhat intertwined. I mean, if we decided tomorrow that we're sick of Saturn, the ability to sell that for us it's a moot point. So we think very highly of those guys. The reason to be there, the feeling of longevity is all present. But looking at the project, I take your point about heap leaching. If that project was in North America, we wouldn't be having this discussion. We'd be talking about how they started producing 6 months ago and the resource is still growing. I think it's a market that isn't as familiar with heap leaching, and I get that. That's a bridge that needs to be crossed. But the important thing about that deposit is inside of a pit design, the strip ratio is about 1.5 to 1. So you look at any other gold mine in Western Australia and how much waste do you have to move to get a tonne of ore to the ROM, and it's probably the average is going to be between 5 and 10. In this case, it's 1.5. So you're moving a lot less waste. So the dollar per tonne cost of moving ore, of generating ore, is just like a fraction. Plus, in any other open, or most other gold open pits, you might blast 10 metres of material. But then to mine it, whether it's ore or waste, you take it in 2.5 metre flitches, maybe 5 if you're really being aggressive, in order to be selective. In this case, you blast 10 and you'll mine it with a face shovel rather than needing to use a digger. So the efficiency of moving that material and the need to be selective just being so much less, I think is a big protection, because you just don't face that risk of accidentally throwing the ore away, because you're going to be in ore for 3 days, not for half an hour, as you are in most open pits. And then heap leach processing, I mean, the risk you have on heap leach processing is, will the recovery work, and will the heaps stand up in a geotech sense to the height that you need them to in order to efficiently irrigate them. I think it's 44% of gold that's produced in the world comes out of heap leaches. This is a technology which is not new. It's very, very well understood. So I think, we feel like we've been buying something which is poorly understood in a market which really gets gold. So, I'm a bit puzzled as to exactly how that'll come about, but I know that there are foreign companies that drop in and say hello, and they're like, geez, mate, you've got something special there. So if there's that kind of eyes on it, these companies, aren't operating in the Australian market, but if they needed an excuse to, having the right size asset, this is 120,000 ounces per annum for 10 years or more.
Speaking like a 17.5% shareholder there.
What do you say? Ding, ding, ding. Yeah, must disclose that.
We're going to have to say a few of them when we talk about alley stocks, which there are a shortage of.
Can't believe you haven't mentioned one yet.
Yeah, I know. We'll get there.
She did give us a to-do list, didn't she?
Yeah,
so,
she did.
could you put a good word in for?
Yeah, exactly. And I mean, I'm looking at your portfolio, and we're kind of there's a couple of names I'm not very familiar with, to be honest, as well. Like Kooneberry Gold, and in addition to them, Sunshine Metals. Run me through what you see there with those names.
Well, Kooneberry first. We invested in Kooneberry when it had one project, its namesake, which is in northwestern New South Wales. Kooneberry project. It's an area where there's been a very substantial amount of alluvial gold mining. So there's been shedding of nuggets, which don't look like they've travelled very far for a long period of time. It's sort of had a gold rush in the era of gold rushes, but very remote, very dry, very difficult to get to, and close enough to Broken Hill that when people started finding gold, there was also a big silver rush to the Broken Hill area. So it kind of was found and then forgotten. I think there's been a lot of modern prospecting success, and there's been a few hard rock intersections and, gold in quartz samples picked up. So there's all this smoke. We invested in that at a valuation which was incredibly low. I think it was like an EV of about $1.2 million the day we first invested. So we put money in effectively buying into a shell which had a project in it. It had a chance. It had fantastic management. Think very highly of the MD there and also the board. And off they went to explore. That wasn't to be. They just didn't get the instant success. And, exploration, sometimes it can cost you $1 million to find something. It's just you don't know if it's going to be your first $1 million or your 100th $1 million. So in their case, they wisely said, rather than keeping being aggressive with this, they came across a deal to deal into effectively a backdoor listing of a selection of New South Wales exploration portfolio. And there were some real crackers in this. I mean, this was some ex-Newmont guys. They'd put together some big targets. They had some JVs with Newmont. They had a high-grade gold situation up close to Armidale. That got vended in. And from there, I think that stock's up about 4.5 times. So it's been a fantastic performance off the back of that deal in and the news flow which can come from that. And, fantastic valuation that it occurred at as well. So it was not one of those silly deals where it happens an enormous number and then it trades backwards because everybody realises how greedy it was. It was exactly the other way around to that. So Kooneberry to us, when we invest in early stage exploration, you can't value it. You're trading on speculation. You don't know what's going to happen. You can have all the hopes in the world. You can have magnificent science. It can happen on a really nice weather day. You can be as lucky as you want. But, in the end, if it doesn't produce a discovery that really gets the market going, then you don't get your price return. So to do it, you have to feel like you're doing it at an absolute rock bottom value. And you have to be able to see a transformational outcome to it. So in Kooneberry's case, we reasoned that it wouldn't take as much to produce a 10 or 20 times return from, I think we're about $600,000 in there, from that level of investment. And so it was something where we could feel, well, there's a really good possible return. We can see many, many, many opportunities for that to occur. And we're doing it at a cheap level. So there's not a lot holding back that return if they get lucky with the result. And Sunshine is probably the opposite of that. Damien Keys, the managing director, is a guy I've known since uni. He was a year above me at uni. Keysy wouldn't thank me for saying he started a couple of years ahead of me, and I didn't catch up. He took his time. So Keysy's gone on to, he has been behind some fabulous project pull-togethers. So probably the best one is Penny West, which was a company called Spectrum, got taken over by Ramelius for about $300 million. And Keysy had been involved in the pull apart of the geology and then putting it back together. And that's what Keysy does. Fantastic with data sets, fantastic with working with people in that environment. And he was exploring in North Queensland. Red River had gone into administration, and
we just spoke about them today on the back of Hillgrove.
Oh, I haven't listened to that one. Yeah,
it's just got up.
Poor old Red River went out of business at just the wrong moment there. They had a troubled operation at Thalanga, and by troubled I mean they'd run into all kinds of financial problems, and Thalanga had brought that operating entity to its knees. So it was put into administration shortly before the whole of Red River went to the administrators. So Keezy and Sunshine dealt with the administrators of Red River to purchase this. And what was attractive was the Thalanga project gets pulled out, you get everything else. So you take no liabilities, you're not operating, but there is a hell of a lot of money had been spent in the data set. And I think, the replacement value of the data which they acquired in that move would have been probably $40 or $50 million worth of years and years and years of soil work, geophysics, drilling. There was an existing resource at a project called Liontown. They've grown that by about 50%. I think it started about 4 million tonnes. It's now 6 million tonnes. And it was a mixed metal, so it's a VMS. It's got zinc, copper, gold. They drilled a few holes, but the wonderful thing which Keezy did yet again was pulled the geology to pieces and said, where are the high-grade shoots? First, we invested in this as a base metals investment, wanting to diversify our commodity sort of exposure. And I think the second or third result that he had was about 20-odd metres at 19 grams gold. And it was like, oh, this is supposed to be our base metals exposure. So they performed strongly off of that. They repeated it with another hit, and this was drilling into a high-grade shoot in the deposit. So it didn't, it didn't reflect what the rest of the deposit looked like. But they've done a wonderful job of fleshing out exactly what loads are which, and I don't think that had been particularly well done. So they now have a resource which I think has been upgraded in terms of quality. It's been expanded. But in that same period of time, they've also brought many, many targets forward. So we bought into that for circa a $10 million EV. It's more or less been the same each time we've invested. And we put a bit of money in, another $500,000 in recently. And the thesis was Liontown is not far from being the scale that it probably could be thought about to be developed. No one is thinking outside of probably the heartland of Western Australia about how you can put your ore into someone else's mill. And that's a very well-developed area, the Charters Towers area. So there's 4 or 5 plants or former plant sites. There are some tailings opportunities which would be quite valuable that I think probably feed into the critical minerals piece in Queensland. So that doesn't exist in Western Australia. It does in North Queensland, and there's a clean-up that goes along with that. So Sunshine has a very dynamic outlook there, but they have something which is very valuable in the ground. I think it is developable. They're going to add to that in the next couple of years. And, if you're going to back anyone to look in the right place, Keezy would be one of the very few people that I'd choose to do that. And he's operating in a data-rich environment. So that one continues to go under the radar of the market, but everybody has their moment. And I think that one will probably sit up reasonably soon.
Might get its sunshine soon.
Yeah, it'll have its day in the sun.
We should pick your brain, Hedley, about a lot of the gold projects that aren't even in your portfolio, but I'm sure you've run your eyes over them and have a view. And there's no shortage of companies that have a fair endowment that maybe go under the radar or maybe you're going to have their moment or have had their moment in the past. But Ausgold's Katanning really comes to mind. Been around a long time. There's 3 million ounce resource there. Will it get developed in the midst of this gold cycle, do you think, or are you kind of on the sidelines watching?
Well, everything that has an established inventory now has the best chance that it's going to have, right? Because when the gold market comes, your ability to raise money comes with it. I think one of the things, and particularly in Western Australia, is there are a lot of people who look at a project and then go, what's it near? Who could take it over? Where's the tension? Is there another mill? That in this current market, that's a big feature. Ausgold sits out there on its own. That project was originally called Boddington South by some of the original management, which, it is south of Boddington, but by a bloody long way. So, it's not like you can consider it an extension or even analogous. It's just in the vague region. You might as well call it fucking Perth South or something. But, originally as well, I can remember some of the intersections that came from the first management team after that company listed, and it went from about a $8 million IPO to being a $160 million market cap company. I remember writing due diligence on it and scratching my head just going, they've got an incredibly small deposit. Why has this gone to such a value? A lot of water under the bridge since then, but things that sort of get a run on and then fall flat on their face, which is what happened many, many years ago. That rejuvenation is always challenged because anytime you get a run of luck, there's always someone stale that just goes, I don't trust you anymore. And, your price goes up, comes straight back down as they sell. So I don't know if that's still a factor, but it is distal, so it needs to develop itself all on its own. It needs to find that scale. And I think that's probably one of the things which is what the market would be thinking. Do I fund them or do I fund something where there is that bit of tension? Now, having said that, they have a register which is pretty impressive. Dundee's a big shareholder there. They're a global gold investor. They know what they're doing. They've put representatives on the board, and John Dorwood's been around. He's operated in some very tough parts of the world as well. So, if you want to give something a good chance, give it a good gold market, and give it the people who know what they're doing. If you could pick that up, which I know you can't, and put it right next to Kalgoorlie, it wouldn't be in the ground anymore. So I'd say the reason why it's undeveloped is because of where it is, and that's one of the things they'll need to overcome.
It was a historic mine, right? Like there is historic open pits there. So at some point it was mined, but it's
Peter Alexander, who was Dominion at the time. I remember bumping into him. It would have been 10 or 12 years ago, and I happened to mention to him that I'd been looking at it, and he goes, "Oh, I remember mining that," and it was probably 30 years ago at that point. So Dominion, once upon a time.
Was he not the fellow that made the pajamas? Different Peter Alexander.
I asked him that myself once, and he was suitably ambiguous. But no, I don't think the two are connected.
You're right. Well, if you're a bloody speaking of, because back to Medallion, they were pushing the story around the exact same time. Do you think Alkane are going to act on them? They wouldn't have went in there for no reason.
Well, Alkane's invested in a number of companies in an equity sense. I've been involved in companies where their name's been mentioned. So it wouldn't be the first time that they bought equity in a company, and they haven't taken one over yet.
Calidus, Genesis historically, pre-rail.
Yep. Now that doesn't, that all that is a pattern, right? And patterns can evolve in interesting ways, because sometimes you try something and try something and try something, and then you do it and you succeed at what you were going out there to do. And I don't know what they're trying to achieve. I would say they're not an investment company, because they are a gold mining company and a mining company, in which case you can see some of the reasoning. Now, I look at the pattern of the things which they had done, and Genesis was before rail. They were backing something where I think they probably felt they could import some mining expertise. Then the deal came together, which created the modern Genesis, and Raleigh came in with it. And what could Alkane add then? If they were value-oriented, they probably said, well, the equation has changed. Calidus, long way from the heartland of gold. So I think they're probably around the edges going, where is there something where we can see value? We might be able to aid with our balance sheet. So, maybe and then in Calidus's case, it probably tipped the other way, and who knows, maybe they looked at it after it fell over. But so Medallion, fits that pattern of, it's on the edge. It's something where Alkane probably felt that they could add value, and I'm guessing at that. I don't know those guys, but probably felt they could add value. So does the equation evolve from here? The fact that it looks to have a milling solution, which reduces the capex of developing it, has changed the share price. But does that change the way that you look at it as a potential acquirer? I don't know. It probably makes a few things easier. So I think it's probably too early to conclude which way they might go. And I don't think there's any evidence to say whether they're coming or going at the moment. So, we can only speculate. And I love it when people speculate, because people pay a lot more for something that they don't understand than what they do. So long may that go on.
Rox, Youanmi, had a pretty hefty raise recently, and Hawke's Point's been really patient and continue to put capital into it. Sort of, their patience certainly paid off with Warriedar in recent history. Mm-hmm. Will it repeat with Rox? And
Capricorn. From sitting, they've done well with some projects which have flourished. Look, I don't know. You've got to be careful. Any investor looking into something, whether it's genius or luck, it wears off sooner or later. So you've got to be careful following people into situations. And I think in the case of Rox, they do have an established resource base. There's a hell of a lot of money been put into drilling there. It is high grade, just compared to anything, it's highest grade. You guys did a fantastic session with Rob. I think you called him Refractory Rob at the time.
It's Extractory Rob.
Extractory Rob.
Yeah. In addition to that, we did a Met episode with Nathan Stoidis, who's now joined the board too.
Yeah. Well, Rox has kind of changed its tempo recently, hasn't it? And I think sometimes it might not be that a management team is doing the wrong thing. It's just that they march along the strategy pathway that they've agreed, and sometimes that just doesn't float the boat of the market. And so I think it's possible to say that with Rox, the market was just not in the groove of that, and by changing the management and in doing so, changing the pathway, and they've more or less said, right, let's raise money, let's start dewatering this thing and we'll go for it. I think that probably portrays a sense of confidence to say, we think this is going to work, follow us, and you'll find out one way or the other, right? Now,
Gold price obviously turned. It was.
I think that's helped a lot as well.
Coincided with the time as well where all juniors started going.
Well, it hasn't been all, but I think the point is that if you are putting yourself in a position to show, we've got this, the shape works for us, we think we're going to make it work, then the market is more likely to follow. So I think that's how they've hitched themselves.
And the incentive package that just got announced for the MD is heavily focused around pouring concrete and building something.
Yep,
as well.
Hopefully they pour gold as well, not just concrete.
Yeah. Magnetic. So Lady Julie, they've had a I think it's LN4 or something like that. Is a new discovery. Interesting lack of reserve to date, but no lack of kind of revelations of we've got a data room open.
Yeah.
What do you make of the deposit?
Well, aggregate numbers all appear quite interesting. Every so often a project comes along and you sort of think, wow, tons of grade's great. Those numbers on costs look like they're a bit lower than I would have thought. I haven't gone through their estimate in a great deal of detail. Whenever, sometimes you look at a project at a point, and Northern Star was a great example of this, going back many years now. You look at it at any point in time, particularly when they're raising money, and you think, oh, shit, you've really got to perform to match this price if I just go by my estimates. And it's not that you demand perfection, but you've got to perform quite well. And Northern Star did. So, over the raisings that they did and the way they executed. And I think probably Magnetic is one of the ones that every time I've looked at it when there's been an opportunity come along, I've thought there's other opportunities which I can probably find a larger position for the same money. And for that reason, I see value elsewhere. Now, having said that, what I'm missing clearly is that at a larger market cap, you can raise more money, which means that you can progress faster. So, that's where they've been successful. So my lens doesn't quite work on that one. I'm looking for the deeper value, and the deeper value takes delivery risk out of it to some extent, but to adequately remove delivery risk, you also need to remove funding risk, and they remove funding risk better than many of the ones that I've looked at. So I suppose, there's a collection of comments there, but one thing that I've sort of lacked is just an understanding of the detail. I mean, if I take a Saturn presentation, for example, you look at that, and any gold BD team of a major in the world is going to go, okay, we understand this one quite thoroughly. We know where to stop next time we're in Perth. Other companies' prezos, you look at them and you just think, still don't know what it means. And some of them have big numbers, but which appeal probably more to a retail audience. So Magnetic's one of those ones that I'd probably need to go and sit with them and go through the sections to feel like I understand it myself. And when business has been quite busy, I just haven't had the opportunity to do that. So I'm afraid I can't really offer the sophisticated view on that one.
What about assets that have been purchased off the mid-caps that have come to the end of their mid-cap life and that are sort of getting rejuvenated? Well, God, obviously Gorilla Gold's like a self-fulfilling prophecy at the moment. That just keeps going up after they got Vivian. But Leeuwin Metals purchasing the Marda assets from Ramelius, so that they've been a bit quiet. It looked like there wasn't much happening until the deal actually went through. It's gone through. These projects that are on mining leases, permitted mining leases that have a bit of exploration potential to find some extensions or take some crumbs which mightn't have been at the appetite of a Ramelius. That's what do you think of that one?
Well, I mean, those things, they're always interesting because any mid cap which is working a set of assets, if it starts to slip in terms of scale, and what's the sensible scale to operate those? I don't know. It's probably smaller than the Ramelius threshold. So at that point, there's probably an effort where they go, well, we either drill and find enough to go on, or we go, well, we'll leave a little bit of meat on the bone for somebody else. So I think you could probably, you can look at those assets and say, is there a way to make a success of those? And just because they've been sold by a Ramelius, I think can often provide an overview which isn't quite correct.
Ramelius has sold some valuable assets in the past. They sold Kathleen Valley to Liontown for $400K or whatever. Yeah.
Is that right?
Yeah.
There you go.
I had a long discussion. Well, my first job as a geologist was a proper geologist was working at Mount Keith, which is a nickel mine which was developed by Western Mining, and every so often on weekends, we'd grab a couple of 4 drives and find a picnic spot in the bush or something like that. Kathleen Valley was one of the places. There was an old shearer's hut near there, which was not a bad place. There was a nice stone fireplace in there. So in any weather, you could go in and have a fire and have a couple of beers, and you just get your crib out of the mess. So we would have driven over that pegmatite. This is cars full of geologists, and there's quite a few people I think have kicked themselves for that opportunity. Buying it at that point gave you the opportunity to run with it. That's been an interesting operation, hasn't it? I mean, you guys have done a lot of diagnosis of that. I got a mate who is a fantastic project guy. Like he devours everything that companies put out, and I reckon we talked about that asset over dinner once, and we were getting quite feisty about it. And he was like, I can't believe that they sold it for that. I should have bought it. And I said to him, well, hang on, mate. After the conversation we've just had, would we, if you and I had bought it, we've just disagreed on, orientations and how easy it's going to be and how many jumbos you're going to need and how you process it and all the ore qualities. And this is all based on stuff we know now. We would have fallen over at the first hurdle. We probably would have sold it to someone else after we'd bought it. So, you need to buy it with the vision. And Ramelius is a gold company. They're not a lithium company.
And there weren't even drill holes into that pegmatite at that point. It was just rock chip samples.
Yeah.
And so I mean, it was like
lithium wasn't really a thing.
No.
It didn't hurdle out of the blocks either.
Yeah.
So So no, I mean things like Marda, I haven't looked at. I think the exploration prospectivity of those things is interesting. I look at a lot of them, which are here's an asset which comes out of a largish company, plus or minus a mill. That's often problematic because you got to pay for the value of the processing facility, which might come with it. Don't think it did in that case, but there was another one I looked at recently which did. So you're paying, I don't know, EV of 20-ish to have some sort of process capacity there. But if it comes with no ore, well, you've got to go and explore. It's worthless. You have the mill, but you've got to keep it in good working order. So, there's complexity that comes with it. There's huge option value that anything you find you might be able to act on, but there's also a threshold consideration. So just because it's been done by someone bigger doesn't sterilise it, but at the same time, that option of being on a mining lease and everything else can sometimes be a poison chalice in that, you might have higher expenditures, so the exploration picture needs to hurry. And hurried exploration is always the hardest. You need time to sit back and think about it and consider what you're doing so that you don't drill in the wrong place just because you're hurrying.
What about juniors that are on their way to production or pre-development at the moment? There's a few of them. Is there any that stand out that you flag as a bit of a risk of not executing?
Well,
any giving you the heebie-jeebies?
There's
obviously ones you don't hold because
because that's why we don't hold them. No, there's plenty that we haven't invested in that I wouldn't say we've kind of come up with a negative value on it, a negative impression. It might be that we've had our hands full with something else. So something came in last week, and I was thinking, geez, I'd love to have a better look at that, but I'm just finishing my paper on Saturn for the board, and I know that if I put two things in front of my board, they're just going to say, mate, one at a time. Now we'll do none. So. We've got to manage that carefully, and that's often the reason why we might look something over is just to remain focused. But I'd say one of the biggest factors, and this is a roundabout way of answering your question, one of the biggest risks that many investors who are peripheral to the gold space would perceive in gold at the moment is that there's been a long history of failed projects. And it's not that they developed something which was absolutely shit and wouldn't work. It's that the financing decisions that they made, the hedging decisions that they made, the production forecast decisions that they made have the mining of it at some stage have brought them unstuck. So, was Calidus a story which should never have been mined? Well, I understand that that's producing quite a lot of money now that the balance sheet issues have been extinguished via an administration process. Bellevue has been a very successful story in the market from whatever it was when it bought that asset to its peak price. Is it going to be a success from its peak price to wherever it is now and whatever happens next? Well, the problem is that's another part of the promise making to the market which has been broken, and I think indelibly marks the sector. Western Australian gold project developments, is there a tainted promise that comes with all of them? So I think the more you squeeze your economics, there's a lot of projects that I look at where they're trying to be 80 to 100,000 ounces per annum, and really what they need to be is 50 to 60. But there's this feeling that if you're not producing at a certain rate, that institutions won't look at you. I think that's flawed. You look at what happened with, the history of Vault, right? Vault was essentially brought about by bringing two companies together, Doré and Silver Lake. They were both small asset companies. As soon as they did, they found themselves above the threshold of being able to be bought by institutions because they were in an index, gamed that beautifully, doubled their price. And they've dealt through M&A from there as well. So I think small assets can work. It's more about the commercialisation process and how you then go on from there. So
it's one of those things, Matty's, a reflection I have is like, an ore body has a natural rate it should be mined at.
Yeah.
Yeah. Use that as your guiding post rather than the broker telling you, you need a 100,000 ounce scenario for me to go and raise the money for you.
Yep.
Yeah.
And you can't easily just get 20% above it, but you can very easily get 20+% below it.
Yep.
Like by not doing it right.
Yep. And the problem is that so many people in the market who might be tempted to buy the shares are wowed by the output that you think you can generate from it and the numbers that you can put on a piece of paper and don't understand the difference between that and what is probably a more natural rate. So, look, I can't think of any which are howlers, and there might be a bit of personal danger in it for me, even if I could think of a great example. But maybe I should say the most attractive things that I see in pre-development gold juniors at the moment are you've got a reasonable size inventory to sponsor growth. So, there's a prize which, if you make those ounces more valuable, if there's a lot of them, then you've got a great leverage effect. You've got a way into production which might not be the huge capex route, as well as if you grow your market value, that big capex route is available to you as well. So, being in a situation where permit pathways and stuff aren't a blockage, so if you're on some sort of a mining lease, great start. And if you can come to the market and say, we've found a way to be in business without having to raise that full amount, that's a great surprise for the market. But being in a part of the world where some sort of M&A speculation can be helpful, I'm not saying want to buy in things that have that speculation. It's just that if there is another mill that needs that ore, then there's that tension which exists, and no one can deny it. Might not come true, but it helps a lot more people look at it. And the more people look at it, probably the more people are going to convert into buyers. So it's good for the price.
I've got a few more companies that maybe tick at least a couple of those boxes.
Vault, LGC, ding.
Yeah, and Genesis and Ramelius for her.
And Ramelius.
So Barton Gold, they put out a study last year and it was like 1-to-1 kind of MPV to capex ratio, but gold's soared since then. So there's real kind of talk in the
we haven't heard talk for a while, have we? Jeez,
no, so,
bring it back.
But I don't think
make talk great again.
Exactly. I don't think the equity's kind of really propelled yet, but there is a big endowment there. South Australia, what do you think?
Well, they have two interesting deposits. One's not so big, but it's reasonably close to their process facility. So and I always get them mixed up because they are so close in name. So
Tarcoola and Tarcoola.
Tarcoola is within trucking distance of the old Challenger plant, which Dominion built. So, if you find any ounces there which are economic, then you've got a way to commercialise them. So they might be off to be able to generate cash flow. And I've always found that interesting about Barton is that that's a part of their story which, could come to fruition very quickly. There's not a hell of a lot of permitting, etc. required. And then Tunkilia, which is the big one. In fact, I did work experience, I think, as a Year 11 student in 1995 in the offices of JB Weir, which was where my father was working at the time. And I was only there for a week, but the week I was there, a company called Helix drilled its first hole into Tunkilia and discovered it. So I've always felt like I had a personal connection to that deposit just because I remember the day it was discovered. And when I'm talking about it, my girlfriend thought I was a dickhead because, no one talked about that at our school. Anyway, so, big amount of ounces. It's sat in the ground for a long time and, it's one of those assets which will really benefit from a gold price running because all of a sudden the capex that you need to pre-strip is more available. But I think, combining those gold assets in the same company has been very wise because one could very well lead to the other. Maybe not in terms of a process solution, but in terms of being able to stay around long enough, generate some cash flow, that might help, but it also builds a bigger rump of market cap in order to fund yourself. So I think, if that was my strategy for them, and I don't think they're too far off that, although, Alex is a clever guy who thinks about economics in a different way to most other people that I know in the gold market. So he seems to have avenues to connections which might be useful for financing, which might be different as well.
Yeah. Golden Horse Minerals, recent IPO, but they were like a TSX company, but they're we're talking about the Southern Cross kind of goldfield now.
Yep.
There is a mill nearby. Do you think they've got an endowment that warrants interest?
Well, the thing I found interesting about that is Nick Anderson used to be the CFO of an unlisted company, which had been involved in processing ore at that mill. So struck me that he, and there was a collection of other companies sort of around that. So, that consortium wasn't particularly successful in executing on its business plans, but Nick knew the area quite well. So that struck me as interesting that he was agglomerating these assets. They look as if they haven't been particularly deeply drilled, and when you list a company, you want your first few holes to be a success. So I'd say they've had a good think about where's the best place to put them. But I think they've pulled out some pretty reasonable thicknesses and grades. So it's on my list of things to keep an eye on. But at the moment, you're speculating on ounce inventory accumulation. If I'm going to buy 10 things across the market, the speculative ones where I don't know what they're going to find, I need to see real cheap. And the ones which I want to get into, which have ounces, I want to be buying those ounces cheap as well. And he sort of sits in an unusual place in between because he's not dead cheap, he's just listed. But at the end of the day, he needs to find them. So I'm sort of watching that for how that evolves. If the ounce situation overtakes the value, then it might slip on the list. I
can think of a company where the ounces are certainly cheap because the company trades with a negative EV after you factor in the cash. But the liquidity is completely absent. Tanami Gold.
Oh, it's been so long since I've looked at that one.
Yeah.
It seems to have been a part of the world where it's just been exceptionally difficult for anyone to commercialise anything that's, of an ordinary scale. Newmont has some excellent assets in that part of the world, so that it's a remote place. I think that adds a lot of expense and difficulty.
Northern Star bought 10% more of that JV, I think, last year for like $15 million.
Yeah.
And yet, so Tanami Gold will still have 50% of it at $30 million market cap and 30 odd million cash.
Yeah.
Is Metals X still on the register for them?
Oh, they own a little bit, but most of it's with APAC who own. I think it's over half of the company.
I can remember there was a year when Metals X and Northern Star were, maybe it wasn't an all-out bidding war, but, one of them had made a proposal and then Metals X had made a proposal and Northern Star came over the top and seemed to win out. And I think Peter Cook got asked about it at Diggers and Dealers, and I was sitting in the audience, and he said something like, "We'll just let sunshine be the disinfectant on that one." So I don't know what he meant because it's sort of all gone quiet. But I mean, the thing I've always found interesting about it was you got two big companies at that time, and Peter Cook and Bill Beeman at the time. They understand gold projects, no mugs. Northern Star has done so many things in that time other than making Tanami a success. I can't help thinking that something has held that back. And, Northern Star bought into Plutonic. They subsequently offsold that, and it's taken consolidation of that field for that to be a success under Catalyst. Northern Star grew from Paulson's, which no longer fit their portfolio profile. So, Tanami might not necessarily get the capital allocation that it needs, perhaps, but I can't help thinking that there's been another reason. I don't know what it is, but I think it sounds difficult just on that basis. And that's me. There's a huge tendency in financial services, and brokers are the worst at this, that if you ask them a question and they don't know the answer will be no, or the answer will be it's shit, or it'll be I haven't heard of it, I'm not bothered. So I could be falling into that biased tendency of saying, look, I don't know enough about it, so I'm not going to go out and be too optimistic. So I could be being quite unfair there. Warriedar. I did say I wouldn't kiss and tell, didn't I? So one thing I think that's interesting about Warriedar is they've drilled out a reasonable gold inventory now, and they're still going. It's a very long structure. They've got I think it's about 25, 26 kilometres of one structure. There's a couple of places there where that structure doesn't look particularly well understood and it's undercover. They've got a couple of shallow holes that say, hey, you change your interpretation, you might have missed the mother lode. I don't know. One day we'll know, but there's gold dotted all up and down that. So it hasn't been closed off. The previous owners of it were fascinated with oxide ore. So there's been a lot of unfinished geological business. That's what attracts me, is that it's wide open. Now, what is also interesting is that they've found significant antimony, which is semi-associated with the gold, in the fresh rock position. And at the moment, antimony is a bit of a buzzword. I don't know if that's a good thing or a bad thing or just a neutral factor for the asset, but I suppose I look at Warriedar as being something that has a very reasonable, it's probably got the scale, it's definitely got starter scale, gold asset, and then you've got this optionality from the antimony. That could give in a moment, and I don't think anyone really understands how well that could work. It might not work at all, but, getting an option for nothing is always interesting. But of those ounces, they've shown that some of the fresh rock ounces are going to need flotation, so they're to some extent refractory. Now, if there was no rocks developing Youanmi, you'd say, well, that might be a bit tough. If you float some ounces into a concentrate there, it sounds like there could be a process pathway which exists in Western Australia where you could take those the extra step. There's Golden Grove, which is just up the road as well, which, the base metals mining there won't last forever. So there may be a flotation plant. There are some free milling ounces there as well, and they will, I think, probably grow a free milling inventory. So
Deflector as well.
Yep.
That's closer to Geraldton.
There's been times when that was pronounced Deceptor, but it's got a flotation and CIL process facility there, and I mean you've got a question that could come a time where that is subscale for Volt. So perhaps there's a consolidation in the area that makes sense. But waving my arms around there, all I'm saying is that on that one I can see one or two different pathways where in many companies you only have one, and they have 1, 2, maybe 3. So I think it's interesting. I think very highly of Amanda. She's a colleague of mine on another board in an unlisted company, which we didn't do any ding-dinging on. They don't have an inventory at all. That's just completely speculative exploration. But Amanda is a deep thinker, a very hard worker. So I was excited to go for a look when the opportunity came up.
And Kairos.
In the Pilbara.
Yes.
Yes. Well, they're an interesting one. So I had a look at them the other day. They did the rounds of Melbourne, and I'd kind of had them in my head as being something which was kind of in the slightly too difficult basket. What I realised is that they have gold, which is associated with arsenopyrite and sulfides. And when someone says that to a geologist, you think, or refractory. And that, I mean, you've got to be careful with the R word because it can stretch from refractory means that the gold is just, encapsulated in something. And you can break that very simply just by cracking it. You can break it by oxidising it. There's various ways you can do that. In this case, the test work that's been done in previous years, if they grind it, and it's not even super fine. I mean, it's a fine-ish grind, but it's not ends of the earth. And you're fine grinding sulfides rather than the whole rock. So that shows a very reasonable pure cyanide recovery off the back of that. So it made me think this is worth looking at. The other thing which was interesting about them is that they sold some tenure to Pilbara for $20 million. I think 10 of that has been paid. So they're well funded for now. They've got about $22 million of liquidity. 10 still to be delivered, but there's no reason to think it won't. So, if you have a reasonable sized gold inventory and they swap some tenements, so it looks like they can follow their trend onto Pilbara ground, and who knows, that might grow to scale, and they look like they're funded to do it. So it's an interesting one. It's on my list to look at, but I haven't come to a landing on it yet. And I don't customarily sort of say, hey, I'm looking at this one, I'm really excited. But I look at a lot of things and, the excitement can wear off pretty quickly on a few. But those were the points which really grabbed my attention with them, and I thought it was well worth spending a bit more time on.
Brilliant.
What's going to be your best performing stock this year, Hedley? And we're going to hold it against you at the end of the year.
Well, last year it was Saturn, and there's a fund manager in Melbourne who he's a journalist. I don't know if he doesn't sound like the kind of person I go to Christmas parties with, but they have a famous Christmas party and they have it after Christmas so that they make sure that everybody goes. Maybe that's just his character. He's famous. He's given people cars and all this stuff. Like for someone gives him a tip, and if it goes really well for him, that's how he rewards them at his Christmas party. So I thought, well, when we have our AGM, we invited Saturn, Brightstar, and Plutonic, which is an unlisted company, to present at our AGM just to talk to our shareholders and say what they're all about. And then we had a dinner afterwards for those speakers and the board and a few of the larger shareholders. So I was thinking I just need some sort of silly shit to talk about over dinner. And we had these medals which were cast many years ago from some silver which we'd come across, and they've got a lion image on it. So I was giving them each one as a token to say thank you, but I wanted to stir one of the MDs up. So Ian Bamborough from Saturn, actually he and I have quite an interesting personal story that has crisscrossed. Ian and I were born in the same hospital in the north of England. I think there's only 3 geologists who've ever come out of that. That's my dad, me, and him. And he also likes Land Rovers. I like Land Rovers. So I made up this crap, and I don't know, I probably went on for about 5 minutes, and I said, oh, there's this other fund manager who buys people cars. So for the best return in our portfolio this year, I've bought them a car, and it's his favourite sort of car. And I had this little Hot Wheels Matchbox Land Rover, which I gave him, and we Ian and I swap photos, where I put one of my toy Matchbox Land Rovers on a rock and take a picture to show him where I've been. So Ian won a Land Rover. That was our best performing stock last year. I hope that it's Saturn this year, and I couldn't tell you what its performance has been since that point. I think it's done quite well in this gold market, but Saturn I think has an awfully long way to run on its value. But it's going to struggle to compete against Antipa and Medallion in terms of return to date in a very short period of time. And I mean, short returns can, you can't extrapolate that trend too far, but both of those look like they could have stuck. So who knows? Maybe Antipa won't exist by the time we have our AGM in 2025. And Medallion, who knows? I mean, we were speculating about M&A for both of those. So I'd love to give them a Hot Wheels of their choice. And we'll definitely be inviting a few stories to come and talk at our AGM as well, just to spice it up and provide a different event for our shareholders.
Well, I mean, congratulations on, really timing the thematic really well. I shouldn't be surprised you did invent the mining clock. So I can't let you go without asking you where we are on the clock right now, Hedley.
I have to give full kudos for the creative concept of the lying clock to my father, Robin, who used it as an analogy when he was working at JB Weir. So it probably dates back to let's say pre-97. It'd be maybe mid-90s. And I think he had observed that in the period of time there, they'd done, they'd all got involved at a time in the market where they were doing small raisings, they were hard work, and then all of a sudden the metals prices came along and they were doing big raisings. And then they formed Line, many of that management team. So that concept is carried. And from that time, I would say that it was probably fairly subjectively set at that point. Now we monitor it, and the underlying theory is that liquidity, which is money coming into the market or going away, is what sets the time. The last time we published it, it was 4:00. Now the boom starts at 6, and I think that we might look back at now and say we were at 6. What we're going to do in our next quarterly, which will be published in May, will be to set the clock at 5. And I think the reasoning around that is liquidity has definitely increased, but the signal which we're getting to 6 or going through 6 is that we're starting to see things like IPOs starting to happen. And as much as things like Greatland Gold are coming to Australia, big IPO, but that's a one-off, very unusual story. And the reason they want to come here is to migrate their listing. So I think we need to see exploration IPOs coming to the market, and I can see them developing. I want to see that stick. So I think, we might look back at now and say boom's on. Good chance of that. And if we don't look back at now, then it could be some other time in 2025. But I think that's where we are, which is a great time to be investing. If you invest in pre-development things, you need to be able to follow your money. So if you miss those opportunities when they have a distressed raising, it affects your investing experience incredibly. So, back to me not being fully invested, we will be investing right through to 9 until we start trying to harvest.
Too, it's probably dependent on lithium because there's too many lithium shells from the 2021 IPOs that are getting used for gold. So unless lithium comes back, there's too many shells for IPOs to happen.
Backdoor them.
Well, I noticed that Core came out with some announcements recently of a massive gold trend in the Northern Territory. So you don't say. You had a big lithium project, and now on the exact same ground, you've got a big gold project you said nothing about before.
They got both.
Bloody
Did you
great.
see they bought the crusher from Minres? $19 million, yeah. Pretty interesting. An asset sale for Mins.
Got to be careful what you pay sometimes, don't you?
Oh, so that's not a bad break fee, I think. Yeah, it's all right.
Oh, very good, Headers. Thanks very much, mate.
Thank you very much for having me in.
We're
Thank you for the beer.
because if you're going up, I'm going up.
Well, we'll keep the fingers
talk
crossed.
about my stocks. They're way too speculative.
Is that why you never ding, ding, ding?
Yeah. You'll be like, oh, you're a dickhead. Cheers, brother.
Thank you so much.
Thank you for having me, guys. It's been fantastic.
Righto, there you go, GC. You missed that bloody episode. That was right up your alley.
Oh, I know. I'm sort of doing a bit of a I haven't watched it yet, but I can't wait to. I'm sure it was amazing. So
they're probably a bit
awesome.
small cappy for you, actually.
Small cappy, I love it.
Righto, let's rip through bloody everything on offer at the moment. We're GRX Conference, Brisbane, May 2022. Get your bloody tickets, exclusive discount
Super
via us.
exciting.
And I'm going now. I'm going.
Exciting.
I'm going.
Rizzy.
I'm going
Under
full conference mode this year. And that's after Oz IMM Underground Operators next week. And so you can still get tickets for that with our exclusive code in our. Thanks to all the partners, Mineral Mining Services, Grounded, Tampa Ground Sports, CRA Insurance, WA Waterbores, Quattro, KCA Site Services, Black Diamond, Cross Boundary Energy, and K-Drill. Hoodaroo Money Miners.
Hoodaroo.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.